Welcome everybody to Pathfinders trainings. I'm Yogeshwar, and after the crash that happened in March, when the market went down from 12,500 to 7,500, recovery has been coming into our market and almost all the markets in the world, whether it is the US market or the European markets or the Chinese market or the Japanese market. Recovery is seen everywhere. And since then, if you see, if I look at the various levels here, the market has comfortably broken the golden Fibonacci level, but the market is very expensive right now. Now, we might feel very good, oh, the market is going up, up, and up, but where is all this money coming from? There is a lot of schemes that were launched all over the world after the pandemic, relief packages. So, and people are perceiving this as an opportunity to buy. So, retail investors are putting a lot of money into the market. And that is one reason it is going up. Some stocks had fallen down, especially small caps and mid cap. They are perceived as an opportunity to buy. And on the upper side, we still have this gap left. And it has comfortably broken. If you see, right, even if I take this high here, it is right on the Fibonacci level now, the golden Fibonacci level. So Monday would be an interesting day. The golden Fibonacci levels, both on upward and downward sides, are very strong supports and resistances. If it breaks on the upward side Monday, it can continue to the rally till almost 11,600 levels. If not, it might retrace back. It might retrace back. So upper targets are the gap filling, but right now one should be careful. Why should one be careful? Let's see. We are in a coronavirus pandemic. The whole world's industrial production is down. No vaccine is in sight, and coming 6 months is tough for everybody, including India, and we also have a China tension going on. In a few days, we will become number three. We will go above Russia. And if I'm looking at India, India also, the cases are increasing. Yesterday, we had 21,000 cases, the highest so far here. So, and if I look at Nifty, this is the P of Nifty. This is a very layman's way of seeing when is Nifty cheap and when is Nifty expensive. If the P of Nifty is between 25 and 30, it is considered very expensive and it's a good time to get out or hedge your portfolio. If you're holding a portfolio, it is not necessarily you have to get out. You can protect yourself with put options by using hedging and option strategies. Then 20 to 25 is very expensive. Let's see where are we right now. This is the latest figure of today from the National Stock Exchange. The P of Nifty is 27.78. So we are definitely on the upper side. So what is driving this rally? I think a lot of hope, a lot of institutional money, investors who are now sick of mutual funds. They want to do something on their own. Mutual funds have not given great returns. If I look at performance of mutual funds, let's look at this investment tracker. And if you look at mutual funds, in the last 5 years, they have hardly delivered anything. 3, 4, 5% per year. Your FD will give you better returns. So you have to come to the stock market on your own to learn it. And we see another thing that is interesting to see at this point is this is Nifty. And another index which is equally important is Banknifty. And let's see how is Banknifty compared to the Nifty. And what you will see is Bank Nifty is actually weaker than the Nifty. On the right side is Nifty, which has almost retraced back 61%. And on the left side is Bank Nifty, which is not very strong. So the banks are not very strong, and normally banking is a leading sector. It is a leading sector. So I would suggest if you have a portfolio, hedge it properly. If you don't have, this is not a great time to start building one. There might be corrections ahead once the liquidity dries up, and learn it properly. Learn it properly. That is important to learn properly. In Pathfinders, you can do a lifetime of course. You can trade like a professional, build portfolios like a professional. And this is the format of the lifetime course. I'll give a link of the same below in this YouTube video. On the lower in the content, you will have the link. And if you want to become a professional trader, you want to trade on your own strength, you want to have it as a part-time or a full-time profession, you can go to this link of mine and give 1,000 rupees of a refundable advance. What does it mean? I am looking for serious students who are willing to learn and earn. So you can give 1,000 rupees and give an interview. If you pass the interview, the 1,000 rupees becomes part of your course fees. If you fail, the 1,000 rupees is returned back to you. And then you can do this lifetime of course where you pass through a orientation, then you do a foundation course of a month, then 6 months you live trade with me, you practice with me, and you learn the lessons in the night. And after that, your mentoring continues for life, 4 sessions. So you can go ahead and check it out. But what I would suggest is that don't come to the stock market untrained and don't be dependent on others. So learn it properly. Just a 42,000 rupees fees for a lifetime of course and live trading practice that you will get. So this is the market, guys. Trade according to the market. The market will not adjust according to you. You will have to learn how to read the market and adjust yourself according to the market so that you can have the most profits. Thank you and see you again into one more analysis. Click on the link below to get the details.